Alright traders, I'm back again with another video, and this time I want to break down the Euro USD. I want to do a thorough analysis of the Euro USD so we can see what we're looking for as trading opportunities and what to look for the next couple weeks coming up. Basically, we're going to get thorough with the Euro, so let's break this thing down. We're going to take this back right here, and this is 1997 way back here. So this is a monthly chart here on the Euro US dollar, and you can see the blue line here is going to be my 100 period moving average, and the green line is the 200 period moving average. Now just want to show you a couple things. If you were looking at this chart, you could see some trading opportunities that looked very good some time ago way back then, but these are things that you still look for now. Okay, but I just wanted to show you this because I really like the way this is set up right here. You can see this long wick candle. Now this is on a monthly chart, so it would take you a while to look at this, and if you don't look at monthly charts you wouldn't even really notice this. But you see this long wick candle, well, it banged up off of this 100 period moving average and it got pushed back down, so the bears got pushed back down by the bulls and it made this long wick candle. This would have been a great opportunity to get into a trade, and you take this candle here and you put your stop loss up above here, but that would have been on a monthly time frame. I don't trade that long of a time frame. I'd be waiting forever to make trades, and I like to trade off of the 4 hour time frame. But I just wanted to show you that because I thought that was nice right there. And then you can see how this 100 bar and 200 bar hold as resistance and support, because here it was resistance, right? And then down here the 200 is holding as support because it came down, supported it for a few months, and then it went back up, hit off of there in 1 month and came back down. Then it broke the 200 period moving average, and then it came back up and held this level right here for 4 months. 4 months it banged off of this 200 period moving average, and it couldn't break through, so it dropped. After the market doesn't break through for a while and it holds at a level, it usually drops pretty well, and there it goes, it dropped. Now we're going to begin from here. This is where we start looking. This is way back, but this is the lowest low on the chart right now, and here's the highest high. So we're going to take those two levels. They're going to be important for us when we do our analysis. So let's go into the first things here on the chart. This red line here, you see this this descending resistance line right here, and this ascending support line right here. Together these lines will make a symmetrical triangle, and if you don't trade chart patterns, then no big deal, but you still can trade these levels. Okay, so you don't even have to worry about saying it's a symmetrical triangle or whatever. You just say that you're looking at these support levels and resistance levels. This is going to be right here, this red line coming down, this descending resistance. So when the market gets up to that level, we would say that that could be a resistance level for the market. And then you see this ascending support. So when the market gets down to that level, we'll say that this could be a level of support where the market may bounce and go back up. And then one thing I want you to notice is this green line here, the 200 period moving average, pretty much lines straight up with that line right there. You can see that right there. And you could see this right here, this 100 period moving average, where the level is. We want to be aware of that. So what I did was made a blue line here. So this blue line going across right here is going to be a level that we're going to be aware of when we get down to the lower time frames. Because when the market moves up to this level, and this, like you see this level hold right here, well, is it going to hold here or break through? So it didn't break through here. You see how high it climbed over, but then it retraced all the way back down. So we could get the same thing here. This 100 period moving average, it respected it there and it didn't break through. Boom. Will it respect it here or violate it? Boom, break through. So we want to be aware of that level in our trading. So I made this blue line, so we'll see that later on in our charts. Now just to get an idea of what this monthly time frame is doing, we see these levels that I said here. Now I made these support zones, okay, support and resistance zones. So this is going to be a support zone based off of this level here, and then this low level right here. So I made that zone. This is going to be irrelevant to us right now when we drop down to the lower time frame because it's so far away. It looks close on the monthly, but once we break down and get down to the daily and the 4 hours, it's going to be very far away because this zone in itself is 510 pips. And then I made this zone here. This is a resistance, resistance zone, and I based it off of the top of this high here and this high here. So I made the zone here and connected it with this high here. So this area is where the support and resistance will be. So this is where the resistance level will be. And this zone in itself is 218 pips. So that's a big zone. Now when we go down to a smaller time frame, we won't even see that on the chart because it's so far away. Now looking at this low here, this fractal level low and this fractal level high, let's put in Fibonacci retracement levels, right? So we'll go from this low to this high. And now we color it in so we can see it. Make it this color, and we'll make it a little wider. Now the chart looks really clogged up, but we'll take those off in a little bit. I just want to show you a few things. Okay, so from that level to this level on a monthly time frame, you can see where price has moved up to that high and then it retraced. So where did it retrace is right here, this level right here, which is in this zone, this support and resistance level. And also with this 200 period moving average, you have a lot of confluence right here. You have this 50% retracement level. So the monthly time frame after this move up retraced to the 50% retracement level, which is a level where you look for support here. So basically it's holding that 50% after 1-2 attempts, and now the market went back up. Now long term we'll see what happens if it comes back to this level and breaks through, or if it continues climbing. We're not going to worry about that long term. What we're looking at that right now for is because we're saying that, well, basically the market is it's holding support here, so it's been moving upwards after holding this support. So that's one thing to keep our bias long, seeing that we bounced off of this level here and we're continuing to move off of that support level. So that's one thing to keep your bias long, right? So let's get rid of that. And then also bouncing off of that this ascending support level here, another thing to keep our bias long. Another thing to keep our bias long is the 100 period moving average, which crossed over the 200 period moving average, so that'll keep our bias long. But this is lagging indicator really, because it's basing off of what price has already done and not what price will do. Price is going to do what it's going to do. So the main thing that can tell us what our bias is, we're between the 100 and 200 period moving average. If price breaks above that 100 period moving average, we're going to look for, say that that's pretty strong signal that this market is bullish. Okay, now if the market bounced off of this level, this 100 period moving average, and came all the way back down and bust through this 200 period moving average and then fell down, definitely going to say we're bearish. Okay, so let's go to the daily time frame. So on the monthly, you see all the things that I just showed you here, the support zones, support and resistance zones, the symmetrical triangle with the ascending and descending support zones. This top level right here, this is going to be a level where if the market comes back up, this is the highest high, so we look for that definitely as a level of resistance right here. Okay, so I had that drawn in. You can look at that on your own charts and see these same things. So we go back down, we'll drop down now to the daily time frame. Now looking at the daily time frame, it's a little bit different. Things that we see here, price is already above the 100 period moving average, and you can see I have this trend line here, and I had this line here based off of this support right here. Boom, boom, rather resistance, not support. Here it was resistance because the market's trying to come up and come through. Boom. So it attempted one, two, three, and on the fourth time it broke through. And then now this, you suspect this level to hold as support. So here it was resistance. Now the market's above it. Now we're looking at it to hold as support. Now when this, you have this trend line here. So you have this ascending trend line, and then you have this horizontal support level. Those two levels together made the ascending triangle pattern. And if you don't trade the patterns, you don't have to worry about the ascending triangle pattern. Just worry about these lines and know that these are where support and resistance can be. So this line here is going to be a resistance line here, but now it's a support line. So now it's we're looking at that line as support. And if you come here and you follow this line, now this line could also be support if the market moves down to it. Now another thing that I want you to notice, here's that trend line, and then you see your 100 period moving average. And now that 100 period moving average, you don't see it anymore because it's going right straight up with the trend line, right straight up with the trend line. So you could see where price sat on this trend line, on this 100 period moving average for a long time, a few days. Looks like maybe 10, 12 days here or more, and then it took off. So you could see this holding as support, this level. And now we're here now. Let's break this down a little bit deeper. Okay, because now price moved up, then it retraced, and then now it's moving up again. Now it looks like price may have retraced, okay, because price stopped right here. So this is going to be our high, this is going to be our low. So knowing that, let's put Fibonacci retracement levels in. And let's color them in so we could see them. And we'll make them this color. And we'll keep them that width. Okay, so we went from this low here to this high here with the Fibonacci retracements, and we're going to look to see where the market's coming back down to. Now the market came down already to the 23.6 retracement level. It did not come down to the 38.2. So are we done? Is the market done? Did it hit the level that it's going to retrace at and take off again, or is it going to come down more to this level, to this 38.2 or 50% retracement level? So right now we don't know. Now usually when the market only retraces 23.6% or less, even 38.2, if a market retraces that to those two levels, you can look at that market to take off and have a nice good run again. That means it's in a strong trend. Okay, so looking at that, we see these Fibonacci retracement levels and the levels that I showed you with the triangle that we had prior, and that's where we had our trade opportunity. Boom, we broke through that level. We broke through this, not even thinking about ascending triangle. We broke through this support level here, this resistance level here. Price hit it 3 times, and on the 4th time price broke through. That's where we get into the trade, and that's where I got into the trade. Okay, so let's go down deeper now. This is the daily time frame. Let's go back down a little more to the 4-hour time frame. This is my trading frame. So if I look at this 4-hour time frame, I could see here's this zone that I made, this support and resistance zone. And the reason I make them like this is because I like to cover the wicks and the closing price, closing and opening price. So here's where price closed, okay, and price couldn't close higher than that price, than that level. So that's a support level right there. but it moved up, the wick moved all the way up to here. So let's just put the zone to where the wick moved. So I made this rectangle with the shaded area, and that's going to be a zone, and it's 34 pips wide. Okay, but now what I do is if price closes inside of that zone, so if I have a price close inside of that zone, I can take the trade, because basically inside of that zone is higher than any closing price that we've had. So this close here and this close here, we would be higher than that if we close inside of this shaded area. But then really, once you close up here, then you know you're probably moving even farther, and then you could put your stop loss below that shaded box, a little bit below that. And the same thing down here. I have my lows here where price closed all these lows right here. So I made that line, and then I made another level where this was right here, where you see this consolidation, and then price couldn't go any lower than this level here. So I made that zone, and that zone's 29 pips wide. Now looking at this, you see from the daily time frame, when we had the triangle pattern, here's that level. So the real possibility is here that price could trend range in this area for a while, and then price could break out of this area low, maybe to the 100 period moving average right here, or the 38.2 retracement level, your 200 moving average, and then your 50% retracement level. Okay, now let's take these off. I don't want to. I want to show you. I have this messed up for us. We want to show this on the daily time frame. I mean on the 4-hour time frame. We showed the retracement levels on the daily time frame. Well, let's get them to the 4-hour time frame now. So looking at a 4-hour time frame, we'll come from here to this high. Okay, so we go from here to this high here, and let's see where we sit. Okay, so price came down almost 38.2 retracement level on the 4-hour time frame. So on the daily time frame, the retracement level was like a 23.6, right? And on the 4-hour time frame, it's just about a 38.2, pretty close. Now that 38.2 almost lines up with this support level right here, which is from that triangle, which from that top of that level where price hit 3 times and couldn't break through at the 31.26 level right here. Now also with this level, almost coming up to the 38.2 retracement level, will be this 100 period moving average. So that's a good level to look at, where maybe if price comes back down again, maybe it stalls at that level. Now if price doesn't, here's the 50% retracement level in between the 100 and 200 period moving average. There would be a couple possibilities. Price can break that 100 period moving average, move down to the 50% retracement level, a level that a lot of traders look at, and the 38.2 retracement level, and could move down to this 200 period moving average. And then finally, here's our trend line. Now if price doesn't even come down here, even if price bounces off of here, once price closes inside of this level here, I'm looking for this to go long. So I'm really looking for price to do this, move up here, come back down, maybe down here, somewhere in here, move back up again, come down a little bit, and then bust through there. Now I don't think that'll happen on Monday, but after the new year, I'm looking for price to break this range and start moving again. So that's where we are. Now also we wanted to be aware of one thing. Once price breaks through that level, here's that blue line. Remember that blue line from the monthly time frame? And you remember what that blue line is? That blue line is this 100 period moving average on the monthly time frame. So once price gets to that level, this could be a level where price stalls and comes back down, may not break through this level. Okay, so we want to be aware of that level. So draw these on your own charts, put these levels on your charts, look at these levels. So this 100 period moving average on the monthly time frame right here. We want to be aware of that. And that's the only thing that I really see that I wanted to put in that area there. So that's looking at the Euro USD. I think that's about everything. Like I said, I'm looking for price to come up to here, maybe bounce down into this area here, come back to that, test it again, come down, maybe not as far, and then bust through there. And like I said, I don't believe that'll happen on Monday, but it could happen next week after the New Year's, but maybe the week after. Okay, so this could range for a little bit. But within that range, there are trading opportunities. You'll be trading within that range. I don't really love trading ranges because if you take a trade here, you don't know how far it's going to go up, but your risk is low, right? Because you're only risking from, if you get into the trade here, you're only risking down to here. So even if that was 29 pips, you got an opportunity to make about, this is probably, let's see how much that would be if we got it from here. Oh, I didn't want to do that. Well, anyway, that's like almost almost 100 pips range, 120 pip range. So yeah, that's a range for you to make profit on. The market doesn't have to be trending for you to make money, but the range to me, I like trading off of the support zone. So yeah, I'll take a bounce off of this. Your risk is low to make all the way up to here. So you're risking just this 29 pips right here to go from here to this level here, somewhere in there. That's a low risk. All right. So basically, like I said, you could still trade that range. If you don't want to trade that range and you want to wait for the market to start trending, you wait for that market to break out of here. And once that market breaks out of here, then you know to take it long and watch out for this level. And then if the market starts going lower and lower, I'm not going to trade anything low until we break this 200 period moving average and then get down to this trend line and start breaking that. Now see this low here, if we break this low here, price come down to this low here and then breaks that low, then I may get into start looking the other way. But until price comes through here and all this stuff here, these are levels where the price can bounce and start going back up. For me to go short after price breaks the 100 period moving average wouldn't probably be too wise, just because it would be the first time for price to come through this period 100 period moving average. And usually price doesn't just go through the 100 period and then bust all the way through the 100 200 period and go all the way. Now you could take that on a short trade. I mean, it's what I mean short trade as like a scalp or something, not directional, but just like something short as far as a couple hours. But I look for long-term trades, so I'm not thinking about scalping really. I don't really scalp. I like to look for setups that are going to make me some good money, some good profit, and then I trade them. That's it, traders. If the market comes down to this level, then we really start becoming, our bias may start changing. But we want to look on the daily time frame to get more of a bias. And on that daily time frame, even if market comes down to that level, that bias still wouldn't be all the way bearish yet. I think when you break this level, you become bearish because I go by support and resistance, and I go by fractal levels. So these these points are all fractal levels for me. When price breaks this level, I could get into a trade short on a daily time frame and look for it to go to this level because the market's looking for levels to go to. Basically, it wants to find a level to go to and then do what it's going to do, consolidate, range, and then break out, find another level to go to and do what it's going to do, break out. Consolidate and range and then break out again. So that's what the market does. It finds levels to go to and then it pulls back, retraces, consolidates, ranges, and then it goes again. So you want to find market levels where you think the market will go to, and those are support and resistance levels. And a lot of those levels are levels that it's already uh, attacked before, already held before from prior support and resistance. So like I said, if it came back down to this level, if it if it came to this level, you might say, okay, it's going to bounce off of that level, so you could play the bounce and take that long. But if you see it close and break, you could take it for the short trade, maybe down to this level or down to your 200 period moving average, wherever that might be at that time. It'll probably be higher than that, but you can surely base it off of this level here. So if you broke this fractal low, you could go to this fractal level. But that's on the daily time frame, and that's the Euro USD, and that's getting a little bit deeper for us. I didn't show you any levels where we want to take the trade to, but you could find those levels on your own if you just look for past support and resistance levels, past fractal levels. So look for levels where the market hit these levels a couple times, and look, that's where your next level is that you might want to take profit. Okay, so traders, that's it. Hopefully you're having a great New Year holiday, and I probably won't make another video until after the New Year. So hopefully you're having a great New Year. Have a happy New Year and have a blessed New Year, and God bless you in the upcoming New Year. Traders, so long.